Good morning. Welcome to Forex In Four. Today's Thursday, September 15th, 2011. All right, we're starting out taking a look at the euro here, and you can see Euro's bounced higher. We've just pulled back a little bit from 138 here versus USD. Well, what's going on in the eurozone? Basically, yesterday we had the move higher in the euro as U.S. stocks picked up some steam in the afternoon yesterday, and we got some affirmation in the eurozone from both Chancellor Merkel and Sarkozy in France, saying that they expect Greece to still be part of the euro, that things are moving ahead, and blah 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 is basically what it comes down to. So they're saying all the right things about Greece, but at the end of the day, we know that they're still saying that Greece has to maintain its pledge to these austerity measures and all these hurdles that it has to accomplish. And it's not so much that Merkel and Sarkozy don't want Greece there. The question is, can Greece remain there? And based on what the bond market's saying, despite their affirmations, it may be tough for Greece to do. So it's going to be an interesting situation. But for now, the market's content to watch the euro move back up just a little bit here as we're going through. And just earlier this morning, they also had some Eurozone CPI data that came in as expected, all right? 1.2% core and a 2.5% headline on the year-over-year numbers. So that came in as expected. Now, I just want to flip around and see some other stuff that's been happening. We've got, let's see here, let's just look at Euro Swissy. All right, SNB, Swiss National Bank, came out with their interest rate decision. All right, they left rates unchanged at 0%, which is what they did last time. Now, they said that they're still committed to keeping the Swiss franc weak, so we know about the peg here that they've done and the target that they've set, and we want euro above right there 120 versus Swiss. So that number's been in effect for some time, and it looks like Switzerland's content to do that. All right, they had industrial production figures that came in better than expected, 3.6% growth versus 3%. All right, last night we had in New Zealand. Let's take a look at that. The RBNZ, Central Bank in New Zealand, all right, they kept interest rates low again for another meeting. So, in other words, they didn't raise rates, and they said that they're in no hurry to raise rates as long as the global economy is, continuing to sputter, which makes a little bit of sense. You can see right here, 82, just above it is that pivotal level that we look at, and we were swinging down, but Kiwi's higher here, primarily on some risk taking that we're seeing in the market, thanks to people feeling a little bit better about the euro. And we've got stocks rebounding as well. Aussie should also be higher. Not much happening down under, but you can see yesterday I identified a support area here using the daily pivots at just about 102. Okay, so it looks like we put in possible triple bottom here on the 30-minute chart, which means that perhaps we can get it back up here to this 104 range. We'll have to see how that goes, but not a ton of news coming out of Australia. Let's look at the pound here real quick. Okay, we got the pound also bouncing higher. Retail sales figures came in better than expected. I mean, they weren't great by any stretch of the imagination, but they were expecting declines. A decline of 0.2%. They got a decline of 0.1%. With auto fuel, they were expecting a decline of 0.1%, and they got no change. So, these aren't great numbers by any stretch of the imagination, but they're not getting worse. They're perhaps getting a little bit better, and I think we've been seeing that out of the numbers in the UK recently, where the numbers are they're not good, but they're not coming in worse than people are expecting. So these market expectations are sort of baked into what's going on in the pound. All right, and we know about the austerity measures that they've taken over there and how that sort of slowed down growth a bit, how they've had some problems with the employment, but we also have Bank of England keeping monetary policy very accommodative throughout this whole thing, so it looks like that's possibly smoothing itself over. But don't forget, they still have an inflation problem there. They're almost they're more than twice the Bank of England's target rate, so we're gonna have to see what happens there. But you can see here, pound moving higher, sitting just above 158 versus USD. Okay, so U.S. What do we have going on in the U.S.? Well, we got some numbers coming out a little bit later this morning. We've got CPI data coming out in the U.S. We're expecting the ex-food and energy number to be at 1.9%, headline figure to be at about 3.6%. Now, that's as expected. It's moving up slightly higher, and I mean, if you think about these numbers, the inflation, it's not so much that inflation's a bad thing when it's contained, but we've got the stagflationary environment where the economy is not growing, but yet prices are still eking a little bit higher. And a lot of this has to do with Fed monetary policy, and a lot of it has to do with politics in Washington and the inability to get economic activity moving. So we're going to wait for CPI data that's coming out a little bit later. We've also got the Empire manufacturing figures, initial jobless claims, which are expected to add another 410,000 newly unemployed, and we have industrial production figures, which they set the bar pretty low on this one. They're expecting a gain of 0.1% after last month's 0.9%. We'll see where that comes in. And then lastly, the Philly Fed's going to be coming in. They're expecting a reading of negative 15. Last month, I don't know if anyone recalls, but it was a negative 30.7 number which came in, which was just a disastrous number last month. So now they're expecting us to get back to negative 15. But don't forget, a negative number shows that it's not growing; it's shrinking. So that's going to be something interesting to keep an eye on. So that's kind of what we're looking at here. We've got, just want to show you dollar yen here. Okay, dollar weakening versus JPY. We're coming back into the 76.50 area support. Let me just pull it out a little bit on the 2-hour chart, so you can see that we've really sort of, sat in this area right here around 76.40 thereabouts. There's talks of Bank of Japan coming up with an intervention soon if this number gets down much lower. So I think if we see a 75 handle and we get into that range, they're going to think about perhaps doing some sort of additional intervention, because right now we've been in this little range here just above the 78 to 76. All right, and if we break out to the downside, then they may feel the need to be a little bit more accommodating to defend. Lastly, let's just take a look here. Things are looking good. So oil prices moving back up towards that 90 handle. All right, and then we've got gold selling off as well, down to just about 1,800 here. So you can see that we've sort of got this risk environment going on where people are content to put on some risk here, and there's a bit of risk appetite because things in the Eurozone appear to be contained. Now Spain also just had a bond auction where they were able to get all their bonds off, which is a good thing. Okay, you don't want to ever be in a situation where the market doesn't pick up part of that, or all of it rather. So it was good coverage on that one, and they're saying all the right things in the Eurozone now. The problem is it too little too late? So the numbers continue to weaken, but albeit at a slower pace. And it's just going to be a question of, can they get this thing finally contained in Europe? There were some rumors prior to the meeting yesterday that they were now considering the Eurobond. Well, we haven't heard anything more about that, which, a lot of people think that would be, a one way to sort of, squash the situation and put it to bed, is that you basically tether the debt to the strong countries as well. So, they haven't gone that far yet. I think it would be politically very unpopular in both Germany and France, but, you never know what's going to happen over there. So, market's taking a break right now from, attacking the banks in Europe and the sovereign debt of these PIGS countries, but by no means are they out of the woods. So, we're going to be keeping an eye on that, and that's really what we're looking at here. So a little bit of risk taking today. Perhaps this 8:30 a.m. numbers that come out with U.S. CPI and initial jobless claims a little bit later, Philly Fed. Perhaps those would be a catalyst that would induce a little bit of risk aversion. So maybe the kind of thing where we see a little bit of a sell-off. Who knows if it's going to be a permanent one? I mean, when I say permanent, I mean for the rest of the day, rather. Or if maybe you just get a little bit of a pullback, and then you can buy that on the bounce and head it into risk appetite. So keep an eye on those numbers early this morning, 8:30 to 9 a.m. And good trading to all.